Okay, hello guys, and glad to have you on board again. Today, exercise session. We no longer do these ones live, as this is hard to figure out an appropriate time zone in which we can meet all together, because you guys are mostly scattered all across the globe. So anyway, we're still going to do these things regularly, because this is the kind of exercise session that you need to perform on your end. So I'm just going to do this kind of replicate exercise in front of you guys today to give you just and show you the path to follow on your end. Okay, remember that trading is not something that you learn from books. It's something that you learn through practice. So the more you practice, the better you'll be at trading. All I give you guys is the way to look at the market. If you do not look at the market yourself, of course, you're not going to learn anything. Okay? So let's get straight into this. I'll take a random assets from my listings here and just show you what exercises you need to do. So in here, we take the lecture market for beginner level, which means all we care about is not trending context but the ranging context, trying to figure out the right time frame in which we can study our two case scenarios, the neutral range stupid areas, okay, the DOM zone and stuff like that you must be aware of. Or option number two, we have ranges inside trending context, and in that perspective we look for third range boundaries. If you do not know what I'm talking about, then just a quick reminder for this: inside the Discord you have pinned messages, okay, into the educational content tab or channel. You've got pinned messages right on top of here where the top-notch educational content is. So for example, you got an MCQ test that will help you testing your knowledge regarding third range boundaries. I suggest you do this when you think you're good enough, so that you verify informations, and if you pass that test with a 15 over 20 score at least, then I think you're good enough to ask for the green level. Okay, so don't rush for the MCQ test. I suggest you do some exercises, help yourself growing better by sharing those analysis in analysis ranges when they will be corrected, either by myself or some other traders in the Discord. So you make the general mistakes. The goal in here is just this: as you practice, you're going to come across trickier contexts in which you're probably going to make mistakes. And you have to understand that most of those mistakes are typical ones that everyone basically does at some point, and you rather like to make these mistakes with demo trading or replays or whatever without engaging capital. So first of all, you get familiarized with the indicators they use, how to figure out the context, the right time frame. Basically, like we said, make the general mistakes first, so that when you get confronted to the market with real money right after, meanings that you've made several analysis, all of the users have said okay, you look fine, pass the test, you ask for green level, and you start real money trading whenever you encounter these third range boundaries or DOM zones trades. Anyway, if you need a refresher, of course you have to look at the trading lessons in the Discord, in YouTube, and I will re-record some of these videos to make them more or just better. Okay, and finally, last but not least, the interactive guide for pro indicator strategy, which we're going to use today as a reference. Okay, so this is what it looks like. This is just basically summing up the core informations of the strategy. I'm still building it for the trend and so on, but all of the ranging context for beginners are already in the book. So what it is that basically it shows you whatever the core elements of the strategy you need to master. Okay, so this is basically when you get this, you have a choice. What type of market do you feel like you're trading in? Is this a chaotic market, trending, ranging, or excess? Though, of course, we're not going to trade excessive market, as beginner level can only go with range. So we're going to go there, okay? What we need to see is prices rejecting the context, okay? We don't want to see prices settling consistently at a resistant context or the support context. That would be a sign of a trend, okay? And you make sure that you're not within a higher time frame range. Just +1, okay? If on the higher time frame the market is ranging, then that means you need to settle for that time frame instead, okay? So you scroll up to the higher time frame, and this is absolutely required, mandatory stuff, okay? You certainly don't choose whether this is a third range bound or a DOM range, before even making sure that you have found the appropriate time frame to study. Okay, so let's make that example in here with SDG. Okay, so the first things I want to do in here is, do we reject the context? Well, kind of, but the moving average is now settling below the context after, oh boy, settling above. What is that? I mean, it looks like we got a bear trend followed by a bull trend. That could be the sign that you're definitely not in the right time frame. Okay, so just switch to the higher time frame. Otherwise, you also have the context alert that would very likely tell you that you might be dealing with something on the higher time frames. Okay, so what is this? Well, this definitely looks more like a trend. So we've got our answer, and we probably have the right time frame, but context alert once again means, okay, we're gonna go monthly. Here we go. No context alert means that we probably have the right time frame. What is it? We do have a rising moving averages and prices have been settling above it, so there has been a bull trend. Okay, and you don't go any further than that. If the moving average settled below the context and both were rising, that means you had a trending context. So now what do we have? The context is reversed. So what is this? Real time third range boundary stuff. Okay, so this is real easy. This is what you guys should be able to do on your own as you progress. Okay, into the appropriate time frame, and once you found that appropriate time frame, then there's nothing more complicated than that. Okay, we found the broadest structure, okay, in which we have found our context. Is the range preceded by a trend? Yes, it is. So we're opening the third range bound stuff. Okay, it is not that complicated. You need to figure out the context to be reversed, which is exactly what happened. Reversed against the trend, so we did have a bull trend because moving averages were below the context, and then we've reversed those contexts. Condition number 1 has been met, so we're good to go. Okay, always remember to validate the rules first. Okay, so this one checked, it's okay. Then you need to make sure that we have no price squeezes, okay, and no squeezes as well on the higher time frame, because if these things happen, if you have a squeeze on the local time frame, that means the range is already mature and there's no trade of a third range boundary possible anymore. Okay, otherwise, if the pattern comes out of a squeezed area on the higher time frame, then it is very risky to trade. Okay, that means the market is lacking of volatility, so you certainly do not trade these third range boundaries. Okay, so pay attention to the second one. It's more like if you ever intend to trade these, the chances for you to be picked as a stop loss are going to be seriously much higher than the normal context. Let me show you what this is actually looking like. Because this can be confusing at some point. Okay, so here we are. Okay, what that tells you is that you need to go to the higher time frame to see if you have a squeezed third range boundary, which is not the case in here. The area is not squeezed out. Squeezes are these gray color of the trend channel. I'll try to find one so you guys can make sure we're talking about the same things. Give it a second to plot. Okay, and we did have absolutely not a single squeeze. Boy, yeah, here we have a little one. Okay, it's gone real fast. No, we didn't even, oh yeah, in here. Okay, so the grayed out area in the trend within the trend channel. Okay, if this occurs, that means you do not trade the third range boundaries that may occur if we reverse this trend channel. Okay, you get it? That's what it means. The third range boundaries still exist as a level, but you don't want to trade any of these. They are way too risky. Okay, so anyway, let's go back to our monthly charts, and this is what we have. Okay, so we go next, use our strategy thing. All right, we first need to make sure that we haven't a delayed third range boundary, so learn about this pattern and make sure you fully master it. Okay, that will help you figuring out this pattern of 3 steps that will create the third range boundary to be delayed, which means if you reverse the context, then the third range boundary has already played its game, and there certainly cannot be another one afterwards, not on the same time frame. Okay, so do it that way. It's really important for you to figure it out. what that plays us in terms of things in here, what is this pattern? Okay, this pattern is we need to go from context to context without reversing the bullish context. We need to break the trend channel. So in here, step 1 is okay. Step 2 is we need to rebalance, but we need to rebalance right up to the trend channel. So in here, step 2 is not okay. So there is not a delayed third range boundary. So as we have a reversed context preceded by a trend, as there is no squeeze on the higher time frame as well, and as we do not have a delayed third range boundary, well, we've cleared up the path. We now have a third range boundary that is going to play its game. It can still be squeezed, so you need to get familiar with this one as well, okay? So the squeezed third range boundary is no more than a third range boundary that should have occurred but simply get entirely broken through. It happens a little once in a while, and if you ever trade these third range boundary, that means you're going to take a stop loss. And like we always said, nothing can be guaranteed in the market. No one can forecast efficiently the markets. But still, we do have a statistical advantage by using a strategy. So, squeezed third range boundary, if you ever trade against them, well, that's a mandatory stop loss. And you have to take it. Don't try to fight it. These are signs of much higher time frame trends being at play. But we'll save that for later. Otherwise, the third range boundary itself, okay, when we get into the speculative areas, have only two options. Either it's going to be the neutral third range boundary or the trending. I don't know what trendy is. I haven't translated this thing. But this is basically what this is all about, okay? Now we have only two options that we can settle for, okay? Though all the conditions that needed to be met, we need to be preceded by our inside a trend. Okay, I'm going to need to review these translations. The context is broken. No, it's just reversed. I'm going to retranslate these things. You need to have a confirmation triangle. You definitely need that. And you have no higher than previous top. Boy, this translation sucks. Okay. When these conditions are verified, there are only two possible options which are relatively similar. But it's still interesting to know the difference between the two models. Okay, so this is definitely what this is all about, okay? When you get into the area, there's only two options. Either the trending third range boundary will show up, or by default, it's going to be the neutral, okay? The only difference between the two are the speculative areas positioning. The first one requires only 61% Fibonacci retracement and can be traded inside the context, okay? And they require a momentum trending signal to be efficiently fully exposed to these, okay? Where on the other hand, the neutral third range boundary requires 76% and need to be closing above the context to make it fully worth it. So this one is less risky, of course, but of course, this means the rewards will be less interesting as well. It's always a balance of risk to reward. The trending context will give you better rewards, but it of course happens less often. So let's try to figure out what we do have in here, okay? So in terms of example, let's just figure it out that way. Can we have the trending third range boundary? Okay. The second range boundary needs to have made closes below the context. Prices needs to be inside, 61%, confirmation triangle, momentum trend signal, and an optional sine wave breakout. So let's just use that, as this is our speculative area risk management, okay? This is what tells us that we can trade, and these signals and stuff just give us how aggressive we can trade these third range boundaries. So let's put it that way. Okay, let's gather the informations that we have. Okay, put them in order. Did we manage to close below the support context as the second range boundary? Yes, we did. So it's okay for rule number 1. Okay, rule number 2 is we need to be inside the context. So rule number 2 is okay as well. All right, we need to have retraced at least 61%. 61% is there, so rule number 3 is okay. Okay, so far so good. What's next? We need to have a confirmation triangle. We have got one in here, which means rule number 4 has been okay as well. All right? And then we need to figure out if we had a trending signal. Trending signal or anything that is red colored. So trending signal, bearish momentum. Oh, we've got 5 out of the 6 required, not required, but out of the 6 risk limitations signals or informations that we process. So 5 out of 6. And the 6th one is an optional one, definitely not required, but definitely can help making things even less risky. Sine wave breakouts. So, oh boy, we've got a 6 out of mandatory 5, but 6 is a bonus. And in that perspective, it's all perfect. Do you want to trade this to the downside? Yes, you definitely want to do that. So this trade is definitely a good bearish third range boundary, okay, trending third range boundary. This is a classical example on how to do this. So let's try to sum up everything we've done so far, because of course there's a lot of chatty stuff when you get to learn these things, okay. It feels like there is way too many informations to process if you just got started with the strategy, but actually over time you'll figure out that these informations we've just processed are not that many. They're actually just a lot of automatisms to build. As you get familiar with the strategy rules, they do not require that much knowledge. This is simply going to become automatically trying to analyze. Let me just pull it right back, okay? What we've done first is that anyhow and anyway, we've opened the range system, okay? And we have made sure that we weren't trading inside a higher time frame range. That has forced us to position ourselves out of the daily chart into the weekly one. We've then figured out that the weekly chart was also inside a monthly range. And then we found out the monthly range has nothing more to tell us. So this is the right time frame to trade on. And then we've made the choice between the two options we have. Once we are in a range and once we found the appropriate time frame to contextualize that range, then we had only two options, the third range bound or the dumb zone, and this depended on what's been preceding that range buildup, and in that perspective that has been a trend, so we had no other option but to open the third range bound structure. Then what we've done is that we've checked that the third range boundary wasn't delayed. Wasn't the case, it was real quick. Then that left us with only two viable options. There will be a third range boundary, there's no even an options, but it still gives us an open probability for this third range boundary to be squeezed. In order to be squeezed, you need to learn what the rules are, okay? To squeeze a third range boundary, we need to rise up to the higher time frame context, which is that line in here. You barely would be able to see. Let me just zoom in. Okay, this line in here, which you see in the background, is the higher time frame context. Okay, so squeezed range boundaries needs to push prices at least to these levels. Otherwise, this is not enough of a price move to be considered squeezing the third range boundary. Of course, prices need to break above the previous market top. Okay. And sustained candle closes above this level, the momentum needs to rise back up again above 80, which means an overbought cluster, and optional sine wave breakouts could make it. So if we zoom into the example that we've displayed in here, we had sine wave breakouts, we've reached out to the higher time frame context, we closed above the resistance context, we have broken new all-time highs, or we've broken the previous market top, and the momentum has gone above 80. So in here we had all of the necessary requirements, 5 conditions and 5 conditions met. In here in this example we definitely have squeezed out the third range boundary. So let's put it right back into our context. If this third range boundary has to be squeezed, well, we have to go to the higher time frame context, which we do not have because there's not enough history. So let's consider that condition as valid by default, as we do not have that information. So first rule is okay. The second rule means we need to settle prices above this resistance context and above the previous market top. Okay, so we need to go at least 56. All right. We need to have momentum closing above 80, which we so far haven't, so we're consolidating. But if the market reactivates and go close above 80, breaks to new all-time highs and breaks the previous resistance, then of course we'll get probabilities to see a squeezed third range boundary. Okay, but you need to think of the market that way. Okay, the market has several branches and options that you can fulfill or erase from the list. The better job you could do is to erase as much context as possible. So try to think it that way. It's not necessarily finding the right context. it's eliminating all of the improbable context from the equation. So what we've done is that anyway, we've erased any trending context because you don't know yet how to do it. We've opened the range box. Inside that range box, we figured out all of the rules that we needed to figure out in order to find the right time frame to work on. Once we found that good time frame, which was 2 time frames above the reference one we've started with, we had to figure out some things. Remember? Okay, in order to process, what we have done is that we first had to find the appropriate time frame and then to select whether that was preceded by a trend or not. So in here we have decided to open our box. Okay, so we've opened range, context, and deleted trend. Then inside that range context, we found the appropriate time frame, which was 2 steps above. We've gone +1, it wasn't enough. We've gone +2, and this one was good. Okay, so +2 has been the appropriate time frame. Then we had to choose between 2 options, which was the classical third range boundary. Okay, so let's call it 3R, or we had the DOM zone. Okay, so in here, as the market was preceded by a trend, sorry about the writing, it definitely sucks. Okay, so the DOM zone wasn't possible because we were preceded by a trend, so we chose third range boundary. Then we had the delayed pattern that we needed to eliminate. We've eliminated that, and that left us with some other options. Either we're going to squeeze the third range boundary, and right now it's still a box to be checked. So right now it's a probable outcome in our market, or we are going to get a third range boundary. These third range boundaries have 2 options. Either they can be trending, okay, or neutral. And as we figured out, the trending is more aggressive, but if the rules are met, then we are going to choose this one. And in our precise case, these rules were okay. So our probable context right now are these. The risk limitation of the current market we've just analyzed is exactly this. This option is still probable, okay, so we pay attention to this among our sets of probabilities. This one has all the requirements to be traded because that's the last available signal we get, so this is by far the likeliest probability. Have we invalidated the perspective in which the third range boundary goes neutral? No, this one is still possible, okay? So these are our 3 options. And we're going to have to risk limit the 3 of them. This one has every requirements to trade it. So you need to understand it that way. You never know what the future is made out of. Okay, the only thing you know is that right now, what you have is a decent risk limitation to try this one. You're going to put the stop loss with the size of the trend channel and so on. And the 2 other options will be risk limitations for you. What that tells us is that if the third range boundary gets squeezed out, you're probably going to take a stop loss, because like we stated, when there are squeezed third range boundary means, well, you're just going to take a stop loss, and it happens. But you have a pretty decent risk limitation on your trade to limit that probability to a minimum, an acceptable minimum. Still possible, because no one can predict the market for sure, but in here the risk limitation is pretty decent. All right. Option number 2 is that out of these bearish signals that we had in here, the market will neutralize them and turn our trending third range boundary into a neutral one, which is still a viable option. It's still probable at the current given time. What that means is that prices will have to go to 76% Fibonacci's, okay? Prices will have to close above the context, and just neutral signals will be more than enough. So, in that perspective, the bearish third range boundary can switch to a neutral one, and it's no big deal. Normally, the size of your stop loss in here is big enough to handle these options. It can cover all of the plans. And remember that once you've got to trade these patterns, okay? So right now, our context would be a trending third range boundary, okay? And what we would do, okay, so we would take the trend channel size. The validation will be reaching out the opposite trend channel. So whenever we reach out to this area or closing below 50% context, we will move the stop loss. what is okay, need to review these translations, definitely. What it is that when you validate, so if we ever reach the trend channel, means we're going to put the stop loss right above the market top. Okay. Okay, sorry about that. I don't even remember where were we. So I think anyway we've covered more than anything, and we needed into this quick example in here. So I took all of the necessary details for you guys to understand that the strategy may sound and look complex at the first glimpse. It actually is not. If you think of what you've done when you were back at school, you've learned some way more complex stuff than that. So this is totally doable by a normal constituted human being. So in that perspective, you should be able to do it. Of course, it looks complicated in the first place, but when you get familiarized with this, and as you repeat those exercises multiple times, these things will just become automatically plotted. And to be honest, the analysis we've just done in here, as I got into full detail to explain everything about the process, took us approximately 25 minutes. But to be honest, if I had to do it all over again by doing it with the habits I have, as it became automatically familiarized for me to do these things, I'll do this in less than a minute. And so should you. And so will you actually. If you perform these analyses over and over again, after repetition, this will just become automatically done by yourself. Okay? But think of it that way. Real traders do not seek for a single answer, because there are no such a thing in the markets. What I try to teach you guys is to think and see the markets the way professionals do. Look for all of the available options by first of all filtering out the market and making sure that you are into the right time frame to look for. Most of the time, beginners and wrong fully traders will just basically try to analyze stuff that makes no sense. So a strategy is meant to put you into the right time frame to study your markets, not necessarily the one you wanted in the first place, but the one that has to be looked at. So there must be a set of rules to put you into the right hands, specifically in our case, right time frame. Once you are into the right time frame, try to filter out all the unprobable context, to be left with a few of probable context, and then you will risk manage. If you have enough risk limitation to trade one of these probable contexts, go ahead with it. That's what it is all about. Nothing more complicated than that. It may sound like it is in the first place, and I'm real honest with you that out there, you probably will feel that this is too much to handle. Well, it's not. It just takes a bit of a time to process, and if you process it multiple times, you'll see that this wasn't as complicated as it looked like in the first place. But the big difference is that if you wanted simple rules, well, sure, the progression seems to be faster. But don't forget that all of these rules have one and only goal. It's not to give you an absolutely congested framework with thousands of rules. It's just to make sure that there is not a glimpse of subjectivity. When you start to learn with me, there's no room for errors. All of these rules have been created for simple reasons because they cannot be transgressed. It's basically that simple. I've created a rule for everything. So yes, there are lots of rules. But as you'll get familiar with the strategies, well, these things will just become easily managed. But there is no room for personal interpretations, personal mixed up, or whatever. The rules are there. You might mix and forget about a few ones when you get to learn the strategy. That's why you need to make those exercises. Do those reviews, okay, and then take a screenshot. You, for example, put a red dot in here to suggest that you have found the third range boundary. Take a screenshot, okay, and get to copy that chart image, okay, put it into Discord. You get into the appropriate channel, analysis range, you get there, okay, you, for example, would say SDG, okay, slash 1 month, okay. Here is a beautiful bearish third range boundary with all the necessary risk limitations, meaning that we have trending signal, inside the context, fibs superior to 61%. Okay, the second range boundary has closed below. Context, and we even have a bonus cycle break, sine wave, cross signal. Okay, even the algorithm automatically detected this pattern. This is the gray rectangle or square. Yeah, this is the gray square signal on the charts above the confirmation triangle. Okay, so we have everything we needed in here. I'm going to paste that image, and this is what it is. Real simple. Okay, this is how you guys should work. Take a random chart, even randomly put on 2 letters, try to put yourself into the good and appropriate time frame, filter out the improbable context to figure out the ones you have to trade. Then look for the risk limitation on all of the available options. And this is as simple as it is. Instead of looking at the charts trying to figure out what's going to happen, you just filter out what is absolutely unlikely to happen and be left with what is probably going to happen. And that's a way different way of thinking about the markets, because that's what professionals think of. We don't know the answers. We just filter out what's improbable and left with the rest that we try to handle as risk limitation rules. When the risk limitations are met, we try our way into this market by knowing that there might be some alternative, but normally the risk limitation is there as a safety belt. If we have enough pre-signals and signals to get to test the market reaction on this area, we're just going to do it. We're not trying to find the answer, just trying to risk limit the probable ones. See the market that way, and you'll be much, much, much better of a trader than you were before. That being said, it's going to be more than enough for today. So practice, 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 practice. I hope today's was helpful. I'll eventually consider doing a few more of these in the future. Just taking some random examples like this one, that would definitely make it. That being said, bye guys.